Make sure, hopefully that thing don't stop. Swing trading with JJ Fade 23. Guys, this video has, this webinar is going to have some random colors that I just added just to add color. All right, here we go. Can everybody see my screen? Is it big enough? It's like, I think it's huge. I don't know. Does it look huge to you guys? All right. Thanks, J-Star. So, guys, I'm recording it. You should be able to see it. We're going to go through all the shit. And then questions left. Or you can ask your questions if you want. At the end, I'll scroll back to 11 o'clock and start answering them. Whatever you guys want to do. I'm just not going to answer them during it because then it gets a little confusing. All right. What is swing trading? Obviously, taking trades that last a couple days to several months. Anything overnight is swing trading, right? But guys, it has a very lot to do with screen time and just seeing how stocks move over and over again. And we'll get into that, obviously. But like, they pretty much all move the same way. You know, they move making higher highs and lower lows, or higher highs and higher lows, away from the moving averages, back to the moving averages. Away from their moving averages, back to their moving averages, especially when they're trending. But guys, the most important thing to remember, trading isn't about taking trades when you know for a fact you're going to be right. And I'm guilty of this too. I always do this. I'm like, that is my setup, but you know what? I don't really like this. I don't really like that it double top first, or I don't really like that it traveled so far. We talked about this last week. Stock went up 200 points, then pulled back to the 21. I didn't take it. It was the first pullback to the 21. I didn't take it. It went up another 150 points. Well, that's me overthinking my own setup and feeling like I only want to take the trade if I know I'm going to win. That's a poison to your trading. It's about having an edge and taking great risk-to-reward trades. How close can you get in your entry to where you'll be proven wrong in the trade is the trick, the mastery, the everything to trading. Because if you have a stock, which I'll get into, like OSTK, MTCH, where they showed you a support level plus the 21 EMA right next to each other, you could literally get in a swing trade with a 15 or 20 cent stop. That could give you 50 fucking R's. That's what it's all about. It's all about getting in as close to you can to where your thesis is wrong. And now you have a tiny risk for a super high reward. There's no magical setup though, guys. Nobody wins 100% of their trades. You have to trust in the power of risk reward. And I've talked about this a long time ago in the free room. I don't know if there's any people in here that need to do the quarter game. But guys, I used to preach this all the time. What is the quarter game? You flip a quarter 100 times. I'm recording, buddy. Thank you, though. You flip a quarter 100 times, right? You mark 2 points for heads, and you mark 1 point for tails. And you see those 100 times are going to have over a long period of time, are going to have a 50-50 result because that's just the odds. But you will see that it's almost impossible for tails to win because the risk to reward is 2 to 1. So even if you flip heads 30 times and hit tails 70 times, well, not that bad, but if you flip heads 40 times and tails 60 times, you're still going to come out on top. And that's what you guys need to trust in your trading, dude. If you have the right risk reward, don't worry. Everything else will play out. Never mind if you add edge to your friggin' game. Now you have a 65, 75% win rate and good risk reward. It's like impossible to lose. So, guys, do yourself a favor. Play the quarter game tonight. Go fucking mark it down on a piece of paper. Heads, 2 points. Tails, 1 point. Flip those quarters. Mark down the points. Watch what happens. Totally random results. Random results. Winning. Heads winning every time. Heads. Heads. You'll be hard luck to find a freaking hard up to find a game where tails wins. So do that because you need it. It's a good reminder. Now, what indicators do I keep on my charts? Most of you guys know for swing trading large caps, I use the 8. Well, actually, I should say I use the 4. So add 4 to that. I use the 4. It's just not always on my chart because I only use that for reversals, which we'll get into. But I use the 4, the 8, the 21, the 34, sometimes the 50. And I keep on the TTM squeeze. I keep on the MACD. And sometimes I used to keep volume profile on more, but now I'm so good at seeing where the volume is just off the chart. But if you guys are less experienced, guys, keep the volume profile on so you can see the high volume price zones, you know? Because those usually act as resistance and support because there was a lot of price done at those levels. So it's hard for the price to go through it easy, as opposed to a volume gap, which I'll get into, which can be a clue to the upside and the downside. It's easier for price to go through those. It's very easy for price to go through volume gaps. There's not a lot of people there with positions, you know. Also, guys, fundamentals. Now, I don't stick to this 100%, but you should. If you want to have the best setups, right, then you need more than just a technical pattern. You need a reason for smart money to want to be in that stock too, because guess what? Retail traders don't move stocks. You know who moves stocks? Smart money, institutes. They move stocks. So why do they buy stocks? Well, they buy stocks because it's either a hot sector. They buy stocks because there's an earnings beat. They buy stocks because on the secret DL, they know that there's increasing EPS before earnings or increasing sales. They buy stocks because there's new products coming out. They buy stocks because there's tons of price upgrades and other shady shit. Although I don't trust price upgrades on their own because as you guys see, a lot of times these companies will pay a fucking... I don't want to swear so much during this. These companies will pay these analysts big money to price upgrade their stocks so they can dump their shares and get out. Like we saw that in some stocks recently, I forget. ZS, even though ultimately it's going back up, but it did have a couple dumps right on those price grade days. Dividend increases can also help. That gets a lot of long-term investors wanting to buy the stock. Rich dudes with tons of money, they want to buy these high dividend stocks because they're just getting paid. And buybacks. A lot of times these big companies, they know they have a really bright future and they want to buy back their own shares. You know? They say, fuck that, I want to buy those back because I know we're going to make money in the future. And if they're buying it back, why don't I want to buy it? I do. If Apple's buying back 1 billion of their shares and this guy's buying back 1 billion of his shares, bet your ass I want to buy. So the other thing, guys, which you can find in other videos, some of the stuff I talk about today, I've already talked about in great detail, like this sector. I like to go here, find the hot sectors over the past 3 or 6 months because those are for swings, and look at the charts of the stocks that are in the hot sectors because a hot sector can help your stock go up tremendously. If you're buying a good technical pattern in a hot sector like AI, CVNA, or like, well, CVNA, you know, the AI fucking hype, dude, all that shit like that, you know, or you know, technology guys, all these setups that we had in technology, they just keep ripping and ripping and ripping because hot sector leading the way. And you can go right on this website and it will show you right away who's leading the way. It will show you right away what sectors are hot and why do you want to long swing a stock in a shitty weak sector that's red over the past 3 months? You don't. That's the answer. You don't. Why would you do that when you could friggin' swing NVIDIA or Apple or friggin' any of these tech sector stocks that are just ripping to the moon? So remember that. Now, also, guys, you know, when you're looking at the chart, I see so many people, so many guys in the room. They'll say, hey, JJ, do you like this? And I'll say, no, because look at this. And they go, oh, shit, I didn't look at that. You have to start with the biggest picture. Top-down analysis means you're starting either, I don't usually start at the monthly, but usually at the weekly. But, hey, if you want to start the monthly, even better. Because the more bigger picture you have, you know, the stronger this. Bigger picture is everything. It gives you stronger signals, bigger picture. Because you might be looking at a stock that looks good on the daily chart, but there might be a huge weekly trend line right above it. Or like it might just be making a lower high on the weekly chart. You know, you need to zoom way out and then narrow your way down, right? I start with the weekly, sometimes the monthly, but usually the weekly. Then I zoom down to the daily, down to the 4 hour, down to the hourly, and sometimes for swings, down to the 10-minute to really narrow down my entry. You know, but I'm always looking for the overall pattern or direction on a higher time frame. It's the most important thing. Who gives a shit about the direction on a 10-minute chart in a swing? Who gives a shit about the direction on the hourly chart? Because the daily chart could be clearly going up while the hourly chart is going down because it's just a pullback on a bigger time frame. So remember that. All of these all of these time frames are working in conjunction with each other. The daily chart's going up, but inside that daily chart, you have hourly chart pullbacks. The hourly chart's pulling back, but inside that hourly chart, you have 15-minute uptrends. You know what I'm saying? So you have to realize that. Where are you in the overall big picture trend? The daily's going up, the weekly's going up, but the hourly's going up, but the 15-minute might be going down. Or the daily's going up, the 4 hours going up, but the hourly might be going down because it's just a pullback in a 4 hour and a daily time frame. But you have to realize that. Stocks make higher lows and higher highs. But guys, 10 minutes is the lowest I'll go for swings. It's just to fine tune the entry. Sometimes I don't even do that, but sometimes if I'm like, all right, I want to jam a really good entry in with a trigger on the 10-minute chart, kind of like what you guys saw with Chewy, even though I ended up taking that trade off for a loss, but you saw the 10-minute wick down on that last day was a fake breakdown. That's pretty much the lowest time frame that I would do. Take a trigger on the 10-minute and then put my stop below the daily level or below that trigger. All right. What does my technical analysis consist of? Well, this is where it gets difficult, you guys, right? Because I'm not just looking at one thing. I'm looking at patterns. I'm looking at flags, triangles, head and shoulders, double tops, double bottoms, EMAs, trend lines, channels, fibs, support and resistance, the squeeze, the MACD, bounces from key levels. The percent, guys, percent bounces from key levels, very important to me. Shows how strong the move is up or down. Last time the stock was there. And triggers, of course. So you have to master all of this stuff and now use it in conjunction with each other. And the more things that line up, the better that swing trade's going to be, obviously. More confluence, the better the trade's going to be. So, guys, I'm going to show you guys some examples of trades I've taken, talk about some stuff, and then we'll go through a million things. EMA support on entry. This is like my favorite thing because when a stock's right on top of EMAs, it gives me a focal point. It gives me a reference on the chart that I know works a lot. Now, if it's below the EMAs, then I don't really know what it's doing, right? It could still be good, but I know if it's making a flag pattern right on top of the EMAs that I'm safe getting in right there, and I have a really great risk reward. And now, when you combine that with other things, you say, hey, look, this has a trend line here. Also, I know that stocks make 3-wave to 5-wave patterns, so you have 1, 2. This could be a 3-wave pattern going up. Also, there's a gap to fill above. So now, of all the things that I know, I take that and I say, okay, look, we're sitting on top of the EMAs. We're flagging. We're holding this breakout level. We're holding this trend line. We're in a 3-wave, maybe 5-wave pattern. We have a gap to fill above. Now, that's like plus one, plus one, plus one, plus one. Now there's 5 pluses for me to take the trade, all right? And you can do that too, you guys. You can make a plus and minus list. And if you get over so many pluses, then you take the trade, all right? How many confluences do you have? The EMA's crossed over. We're sitting right on them. We're curling off. We're on the trend line. We're on the breakout pivot. This is a cup and handle, right? Cup, handle, breakout. Gap to fill above. Upper trend line. There's so many things you're looking at to say, okay, right here will give me a great entry. I can get in right at 66, risking right below this structure. And I'll talk about that later too. You don't want to stop out, guys. You don't want to stop out above the bullish structure, no matter what the EMAs are saying. Even if you go below the EMAs right here, but if the bullish structure, like this trend line or this triangle, is still intact, and you didn't close below it, then don't stop out. All these little things that you need to learn to be great. It took me years and years to be able to put all this together, right? And you want your trades to be perfect. Look, see this squeeze right here? Huge squeeze right here, but where is that squeeze on the EMAs? It's not on the EMAs, it's under them, so that's not good. I want it to be perfect. If I'm playing a squeeze, I want it to be on the EMAs just like this. Now, this wasn't in a squeeze. That would have been even better if it wasn't a squeeze. That would add one more thing. Now that's another plus. Now we got 6 pluses, right? But over 3 pluses is good. I mean, sometimes you get 2 pluses or even 1 plus and it just looks so good, but that's all from experience. Like I said, EMA support gives great risk reward. Stacked EMAs, guys. When the EMAs are stacked positive like this, they're not. Look at this is tangled. This isn't no good. No good. Stacked positive. 8 on top of 21 on top of 34. In a squeeze, right on top of the EMAs. Right? Gives me great risk reward. But that's not all I'm looking for, because what if there's a friggin' major supply zone right above, or there's a major resistance level right above? Right? So we have one part of the trade. We have a nice squeeze going on. We're trading in a range. We're right on top of the EMAs. I love that. We got some bottom hammer candles showing us buyers came in at the 21. All right? Now, but I need more. What's the more? The more is me knowing, look, we have an upper trend line target. Look, stocks usually can go up to the 61 to 78% fib, make a lower high. Plus, we have a gap to fill above again. So this is how you use this in conjunction to know where the stock should or could go. It's not just taking the setup and not realizing there's a trend line that goes like this. Right down here, and it's going to cock block your stock in $2. That's why, like, RBLX, Roblox, was such a sick squeeze, but the trend line was just too close for me to get excited of it. And what did it do? It popped up and slammed back down off the trend line. So if that trend line was higher, now it's like, oh shit, now you have a squeeze like this. You have a trend line that's up at 320. Oh, what's that? $20 away. I'm going to risk $5 to make 20. I'll take that all day. So, all right. Upper trend line target, lower high position, 61 to 78% fib. This adds to my conviction of this trade. Guys, for anyone who came, remember we're going to be in the we're in the mic chat, not the regular trading floor chat. So mic chat. So I won't see if you're writing anything. All right, guys. Most of you remember cost. It's like one of my biggest trades this year. Clear as day pattern, my favorite. When I see this, the stock's down here. It's making a perfect angle of a pattern, like a wedge. It came down, look, it came down support, bounced 25%. Came down to the support, it bounced 20% here. That shows me how strong this is. It bounced 20% last time it was here. Now it comes down again. It gives me a hammer candle fake breakdown right at this level, knowing it has the upper trend line target, knowing how strong it pushed off last time. You bet your ass I'm going to buy it right here, right on that trigger. And it had the 450 whole psych huge level. That's another thing. So you buy it and your target is up at the trend line. It's clear as day and obvious, which I could have shorted up here too, but I got so excited selling my long that I didn't just switch to short. Never made it back down here anyway, but still a hell of a trade. And sometimes this happens. You have a perfect pattern like this, it doesn't end up playing out, because guess what? If the market was weak, it would have came down here, but the market was so strong, it just held it up. Broke out of the pattern. So you have to realize everything you're looking at, right? But this is very important to me, you guys. These huge bounces. Look at this drop. No, it doesn't make me nervous trading against the EMAs, especially when we're this far off of the EMAs. Look how far. See, I'll get into this after. But guys, sorry, I can't help but answer the questions. I'll get into that too, though. Just keep asking your questions and I'll get into them after. That's a good question, though. No, yeah, that's all right, dude. It's just I can't help it. I wanted to answer, but I forgot. I'll answer it after. I'll go back to 11 o'clock and answer after. So, guys, here's the Apple one that I put on Twitter, which I don't like to put a lot of trades on Twitter before they happen. But this is the one that I wrote that I was buying it right here. Why? Look, huge demand zone. Look at the move that it made here. The stock from this level went 47% up before it truly reversed. All right? And look, perfect channel. Perfect channel. Comes down to a demand zone, fake breakdown in that demand zone at this lower channel line. Hell yeah, I'm going to take this trade. And then your target is the upper channel, even though I sold over here like a pussy. Things way up here now, but that's this is confluence. High demand level, lower channel line, or the upper channel target on a super great fundamental stock. You know, not buying Apple is like, you know, that's one of my favorite things. If Apple sets up technically, it's like, yeah, I want to buy it. Hell yeah, it's Apple. Pay attention to how strong these moves are. Look, you guys. Look how fast and hard it fell from here. Of course, when it goes back up, it's going to dump. And look how hard it fell from there. So that's a strong supply zone. It comes back up, dumps. We'll get into that later. But just, you got to really pay attention to all this stuff, right? Again, here's another flag on the EMA, but I need more. Big picture. Because look, this one especially, this had a trend line right here that I was like, is that rejected that trend line? So it might, that might be it. But then I said, no, this already did pretty much a fake breakdown over here. It's flagging right on top of the EMAs. It's in a squeeze in the MACD. Early phase, guys, remember, squeeze plus early phase of the MACD crossing over is my bread and butter when you add it to patterns. All right? So now, why did I like this so much? Well, look where we were on the weekly chart. Look where we were on the weekly chart. I bought this down here at 34. We weren't even we could even bounce just to this same position and still get a huge trade. Never mind if you look at the fibs, this thing could bounce to here, could bounce to here, could even bounce all the way back up to here. So that was why I thought it was so amazing. It was like great risk reward. It was setting up on the daily chart, but it also, the fibs and the weekly EMAs were telling me, hey, this thing can go higher. Using that all in conjunction. So yeah, that was great. Now we're sitting right at the weekly EMAs. This is the first time at the 34, right? So this could ultimately reject and want to make a higher low down here and either go back up or break down. Because look, first time back to the 21, second time back to the 21, 34, third time back, it could break or it could come down. But this is really only the first time to the 21 all the way. All right. So now, guys, SPY is another trade that I didn't take it way down here, but I wanted to bring this up because if you look, you have your EMAs, right? Plus 50, you have the 50 fib perfect, not to mention, look at this, 1, 2, 3, 4 days and then a gap down right into it. And look how far it is away from the 21.34. That's the only time I trade reversal trades. Either multiple days down, like 3 or 4 days down, or way away from the 21.34. So that increases your probabilities the more days down it goes. Stocks can only go so far away from the EMAs, you guys. And I have a trick for that I'll talk about later. But I want to put that on there. So, all right, here's another one. A bounce after a huge run up on SPY, it breaks its trend line. The EMAs cross down. It flushes hard, right? This is the first bounce back to the daily EMAs on SPY plus the 61 fib. And you have pivots, right? Pivots, breaks, support breaks, and it gets retested. Plus 61 fib, plus the first reversion to the EMAs, which I love. And it gave you a double top here, even better, because you could have... See, guys, this is the thing. If you take it on the first one, maybe you wait for the rejection, take it down here, or take it down here, risk up here. If you wait for the second one, you can jam your stop. If this rejects this level again, now you jam your stop right here. Now you have a fucking $1 million trade. That's the magic of swing trading. Getting your stop as tight as you can, validly though. Not just making up a place to have a 10-cent stop and getting stopped out. I'll always tell everybody, guys, this trade right here is better than this trade right here. This trade right here is better than this trade right here. Because this trade right here, your real risk is this right here. Or you're just waiting for this to break down, break trend, and shorten it down here. And that's not bad either. But the lower high gives you the really close risk reward, as opposed to shorting right here, risking off the next high that's far away. Or shorting right here, risking off the next high that's far away. That ruins your risk reward. So that's why I don't like to catch the top. Either wait for the trigger or wait for the next lower high. Catching the top, you kind of have to use wide stops so you don't get stopped out or risk off the real next place, which is to the left, the last place in field. Is there something to make the setup stronger, guys? More confluence, EMAs, pivots, fibs, waves, patterns. In this case, look, you had the one we were just talking about. Not only did it drop, come back, first reversion to the EMAs, 61 fib plus pivots, but also left shoulder, right shoulder, head. And then the right shoulder ended up being over here, but still, at the time, this could be the right shoulder or that could be the right shoulder, but this one lined up close to it, and that gave you an amazing trade. Amazing, amazing trade. Multiple confluence here. Big, huge flush. Look, trend broken. Big dump. Far away from the EMAs. Reversion back to the EMAs. Also a supply zone. Also 61 fib. Also pivots. Also left shoulder. Multiple confluence. Makes me be like super excited on any fucking stock. You know, it's like, okay, this is definitely going to work. So you have to know your patterns, know how the EMAs move, know how your fibs play out. Just know your supply zones, know your pivots, know everything. The more you know, the better you're going to be. Bigger picture pattern, guys. This helps me a lot. JetBlue, monster trade on JetBlue. How? Because I zoom out to the bigger picture, I see double bottom. Look at this, guys. How far did this go? This went from here, $6 all the way to 22. What's that? 6, 12, 18, 500%. Now it comes back, first retest of this huge demand zone. Comes back down to it, triple bottom. EMA start curling up. Fuck yeah, look at this. Right here is where I started saying, okay, this is amazing. Why? We're in a big picture double bottom, right? With a smaller picture triple bottom. And look at this, you guys. Accumulation zone, 6 squeeze, MACD crossing over, EMAs crossing to the upside, channel, flag, a million things that I know that I see. I see a flag here, I see a channel here, I see the squeeze, I see the MACD, I see the upper trend line target. I'm all about it. That's it. And that's what I just keep doing over and over and over again. Multiple confluence using everything that I know, pile it into one package, and only taking the very best of the best trades. So, flagging on weekly EMAs, plus trend line with room to go. This is kind of like the last one that we saw, you guys. You know, we have, look at perfect trend line right here. We're on top of the EMAs. We're flagging. We're in a squeeze. We're starting to curl up. Gives you very great risk reward, knowing that it could go to the 50% fib or this gap or even the 61 to 78% fib. It's all about risk reward, having an edge. Stocks curling off the EMAs, curling off the trend line. Risk reward is great. Take the trade. You can take it as soon as it breaks this downtrend, even right here. As soon as this flag breaks the upside, you take it. Boom, put your stop down here. We'll get into that too. I'm just showing you some examples before we get into like the real workings of it. Here's another. This was like another amazing trade that I just could have literally held it from here all the way to here, but my options exploded so fast that I just couldn't help it. I took the friggin' trade, but I should have took it. I forget if we got off. No, we didn't get. Yeah, we did take that off the 8 the second time. No, I don't. I forget. Anyway, but look, you guys, right? Trend line break and retest. We know that trend lines break and retest, right? Flag right on top of the daily EMAs. Look, squeeze is about to fire. Look, MACD is crossing over. Great risk reward right here with your stop below the EMAs. You can also wait till it breaks the downtrend. Draw another downtrend on this flag, or take it on the first candle to make a new high, which I usually jump the gun. As soon as I see a bottom tail hit this, as soon as I saw this hit this trend line, start to go back up over the EMAs, boom, I'm in. Stop below lower day, which is also below the EMAs in this case because that gives you great risk reward, and you know it shouldn't close below the EMAs if it's going to work. It shouldn't close below this trend line if it's going to work either because it's a trend line break and retest. And then friggin' you get in. Yeah, you get in at 330, dude, which is also, remember, a huge psych level. And look at this, boom, 120 points. And if you use the 8 as a trailing stop, which I'll get into that, you still didn't get out till up here. There's 3 ways you can use trailing stops, and I'll talk about them all. But for right now, I'm just going over the trades. Guys, so trend line break, retest, EMA support, squeeze, MACD, strong move up, flag off the 8, enter again, boom. Strong move up, second flag off the 8, enter again. Get out when it closes below the 8 EMA. That is the money shot. All this stuff tells you that this should work, right? All right. Weekly chart. Big picture time frame. Flagging. Squeeze. Flagging right on top of the EMAs. Mara. Upper. We talked about the upper channel. It went right to it and then even through it. Why did it go through it? Well, look. This thing could go to here. This thing could easily go to here according to the fibs. It could easily go to here. Could even go to here in the next few months because look, left shoulder, head, right shoulder. And that's, again, combining everything I know into friggin' one thing. The weekly EMAs are crossing over. The squeeze is firing. Now we know this squeeze hasn't even fired yet, you guys. This thing could fire and then go for fucking 10 weeks. 10 weeks up to here. So the first target can be the upper channel and then let it go. Now you use the 8 EMA or what I'll show you later as a trailing stop. Amazing risk to reward, amazing room to run. Just know that it can easily go to the 38% fib, even if it's going to go back down here and break the lows. Even in a massive, severe downtrend, this could easily go to the 38% fib and continue its downtrend. No problem. And here's Mara in a smaller picture, right? Look, we ended up taking Mara right here on the flag on the 8. I didn't see it right here, but look at this squeeze. Look how huge this squeeze is, you guys. Look at this triangle and the massive volume that comes in on the breakout. And guys, that's the other thing. Guys, my favorite flags off the 8 are when massive volume comes in on the flagpole. That means I know there's a lot of eyeballs on it. A lot of eyeballs watching this breakout, so the first flag off the 8 should definitely work. But look, guys, once you get this, once you draw your trend line on here, and it looks like that, and then you draw another trend line on here, and it has this angle, and they match up, that's a perfect channel. Now you're looking for the upper channel target. Get in as close as you could have took this squeeze, risking below the channel, and you could have friggin' blasted that for friggin' 100% gain. 500% in options. But even if you got in right here, it was still a sick trade to the upper channel. So that's that's an amazing setup. Multiple confluence, lower channel line, plus the squeeze, plus the EMAs curling up. Strong move up, flag off the 8, boom. Ripped it. High volume. Also, guys, remember, MACD crossing over. Squeeze, fire, and MACD crossing over. Tesla. It was another one. Look at this. Dude, I didn't buy Tesla right here, but I wanted to. So I was talking about this on Twitter with someone, I forget. Guys, this is a flag. Look. This and this. It looks like the flagpole hanging on your grandmother's house. There's the sun on it and 2 flowers. Right? Look. Flagpole hanging on the porch. Flag. Look, when this and this are at this angle and this line up, and this bounces off this at the same exact angle as that's a channel. So you buy it, and guess what? You aim for the upper channel. And then if it breaks that, now you got a trail and stop with the 8. Look, you wouldn't have got out till right here if you trailed with the close below the 8 EMA. Guys, look, cup and handle. So if you didn't buy it right here, you could have bought a cup and handle breakout, but I don't do that. I don't buy breakouts. What I do is wait for a breakout, strong move up, flag off the 8, hammer candle, I'm long. Risking below the 8, sell into the upper channel, and then hold the rest, trail and stop. If I miss this entry down here, I don't buy breakouts, not flag breakouts, not double bottom breakouts, not cup and handle breakouts, but I use them to know that, okay, the stock just broke out of a pattern, now made a strong move up, flag off the 8, still didn't touch the upper channel line yet, so I'm good for that. Good for that target. And yeah, and you can also, guys, use EMA. You can also use EMA extensions, which you would click right here, drag it down to the pullback, click, and show you the extension, how high it goes. You aim for the 100% on 161 or higher. I think I left that out of this, but I've talked about it many times. You guys can find that in the Fibonacci thing, or I can help you with it later. But this again is high confluence, very high confluence trade. You have the channel, You have the EMAs, you have the upper trend line target. It's just crazy. The EMAs cross over, breaks out of the range, pull back, upper target. Now getting it down here, taking a flyer. This has a big red candle. As soon as this opens, starts to rip off this trend line, boom. Now, guys, I put this, when I see it channel, the upper trend line like this, the angle is like this, I put the lower one on before this even gets here. Because I expect, and if I see it come down and touch it perfectly, boom, I long. I already have it on here, the channel tool. I go click, click, drag it down, put the channel tool on. If I see this touch like this, boom, I get in right here, low risk, right below the channel. So, that's, that's also you had the support level right here on the gap up that pushed it up. See these big demand candle? Boom. Shows you buyers came in right there, so you can expect that again. All right, let's move on to the next one. All right, guys, understanding how stocks trend, moving to and away from their moving averages, making higher lows and higher highs, and vice versa, lower lows and lower highs in a downtrend, extending away from key EMAs, coming back to them. Also understanding what that means on a lower time frame. Because just like I said earlier, just because you're in an uptrend on a bigger picture time frame, you're going to have smaller picture downtrends in between that. So realize what phase of the trend you're in, depending on the time frame. All right, now look at this, right? Is this an uptrend or a downtrend? It's a downtrend. Look, EMAs cross over. We go down. We extend from the 2134. We go back to the daily EMAs. We make a lower high. We come down again. We extend. We make a lower low. Away from the 2134, back to them. We make a lower high. We come down. Right here, this stock makes a higher low from this point. So because of that, it has a strength to push it up past these highs and then make a lower high compared to this one. You get it? Because this made a lower low here. It couldn't push that hard. But once it made a higher low here, more buyers came in because it made a higher low. Understand why that's happening. Now, comes down, it can't hold on to the EMAs. It loses them, pops back up, makes a lower high. The downtrend continues because it couldn't hold above the EMAs. Right here, if we curled up, made a higher high over this one, now we just need to break that and we're in an uptrend. But we couldn't. Instead, it tried to claim the EMAs. It couldn't. They crossed back below. Flushes down, first pull back to the 21, makes a lower high, comes back down, makes a lower low, extends away from the EMAs, back, lower high, lower low, lower high. This made a higher high from here, but it's a lower high from here. Can't reclaim that, couldn't go above the EMAs again. Back down, lower low, but we're extended from the EMAs, so we come back to them. Now look, is this a higher low? Is this a higher low? It's not really a higher low until we break this and make a higher high. Or else it could curl back down and still make a new low. Now, the EMAs cross over. Stock makes a higher high. Great risk reward long. Something has changed technically in the stock. We have made a higher high. We're not making new lows. The EMAs are crossing back over. We have a range right here. This area is a range. We have a pattern here, a trend line break. Kind of a weird triangle, but we break out of that range. We pull back to the EMAs. We have a pivot here, breakout and retest. Perfect entry for a long, right on top of the EMAs. Amazing risk reward. You could risk like $1 or $2 and boom, 40 fucking point move, 30 point move, right? And what happens? Once we get a little extended off the 2134, we come back to it again. And if you're in this long and you don't stop out at the 8, if you don't use the 8 as a trailing stop right here, it comes down, it pushes off the 2134. Right here, when it makes a new low, it starts to go below, just get out. It's changed back to bearish again. All right. Consolidation, trend, consolidation, guys. Accumulation. All right, look at this. Stock comes down to support. We have bottom tails at support, right? That shows support. But I don't always buy unless this is the only way I would buy this right here is if I look to the left even farther and it showed me it rocketed 20% off here last time it was here. Instead, I'd rather just wait for the stock to prove to me that it's strong. Right here, We stop making new lows, we make a higher high. The EMAs cross over. That's a strong move up because it extends off the EMAs. Comes back, bottom tail off the 8, I go long. Boom. Put my stop below the EMAs. Or even below this because we got the bottom tail. Now we go up, we extend from the 21.34, we come back to it. We try to break below, we can't. Right? Tries to feel below the EMAs. It can't. That's strength. Right here, it tries to feel below the EMAs again, and it can't. Now I'm like, oh shit. Now I see a triangle pattern, and I know we failed to go below the EMAs 2 times. Now it's on and popping. That's when I start getting excited. On and popping. So, can I get good risk reward buying this pattern break right here? This is a pattern. If we break out, we're right on top of the EMAs. Hell yeah. You can buy that, or you can wait. Strong move up, flag off the 8. First pull back to the 21. You can buy wherever you want. I like all these setups. But guys, the point of this slide was to show you that once we get 821, 821, whatever, once we consolidate the EMAs tangle and it breaks out again, that's a reset. That's a reset for me. Now we've consolidated, we've digested the move. We no longer are on the first pullback to the 21. This is a reset. Now, strong move up, flag off the 8, retest the EMAs, go long again. Look, trend line break and retest, plus EMA support. Long. Strong move up, flag off the 8, long. Strong move up, comes back to the 21. First time to the 21 in this new uptrend after this consolidation. You buy that, boom. So, you see what I'm saying? If you digest the move and the EMAs tangle or it goes sideways for a lot and then starts uptrending again, that's a reset. We're no longer on the first flag off the 8, first flag off the 21. We're on a reset to a new trend, and we can continue to friggin' buy the flags on the EMAs. Yeah, so. How many times can we trade off the same EMA? Like I said, if it resets, you could trade. After the 8 crossover 21.34, we start trending. I like the first 2 pullbacks. Obviously, I like the first one the best because that's still lower in the run, you know. If we have a breakout pattern, either coming out of accumulation or demand zone, double bottom, inverse head and shoulders, or range breakout or a fake breakdown, again, I still like the first and second EMAs only, with the first being my favorite. After the second pullback to each key EMA, the stock has a more likely to fail that EMA and pull back to a deeper one. Meaning if you're trading off the 8, it may want to pull back to the 21. If you're trading off the 21, it may want to pull back to the 34 or 50 after the first 2 pullbacks to the 21. But remember, if it consolidates, goes sideways, does another breakout, it's a reset. Now we're rocking and rolling with the 821.34 again. And guys, also, remember, this is the funny thing about EMAs, and I'll show you this later with NVDA. I like the first 2 pullbacks. I don't like the third. But guys, if a stock pulled back to the 21 4 times, 5 times, now it's like, okay, now it's just you might as well keep buying it until it fucking stops working. Because now it's like, holy shit, this thing just is obsessed with pulling back to the 21. Kind of like NVDA. I'll show you a chart example of that later. It pulled back to the 21 like 50 freaking times. Not really, but you get the point. All right. Guys, this is where I think a lot of people don't trade. Yeah, I'll show you that later, buddy. This is where a lot of people don't pay attention. Guys, I'm always paying attention to the angle of the move. Look, this is only a 24-degree angle, right? It's not that steep. It's not that strong. So not only is how far it gets off the EMAs going to tell you which one it's going to come back to, but if the trend isn't that steep, it's only a medium trend, it's more likely to pull back to the 21.34 than a super steep trend that only comes back to the 8. Watch the speed and the steepness of the trend, right? This is a slow moving trend back to the 21.34, back to the 21.34. But look at this. Look at compared to AVGO. Very strong, fast, steep trend. Can only make it back to the 8. Hell yeah. Use the trend line tool. I can't help but answer Adam every time for some reason. All right, guys, sorry. I'll go back to those after. 75-degree angle. Look at this, you guys. This is a 75-degree angle of steepness. Of course, it's only going to go back to the 8. It's way too strong to go back to the 2134 until it starts getting, more sideways and more sideways. But look how straight this is. Flag off the 8. Look how straight this is. Flag off the 8. Never mind how far it got off the 8. That's why I can only come back to it. Also, the steepness and speed of this move tells me it's going to bounce off the 8 when it gets back to it. Just too strong. Strong moves, flag off the 8. Well, how do you know it's a strong move? Because I know about how steep and how fast this is going up and how steep the angle of the trend is. And then look, guys, guess what? 1 flag, 2 flags off the 8, and then it wants the 21. Oh, of course it does. That's why I don't buy the 3rd flag off the 8. But what I do is stop out if it breaks the 8 right here. So you could have bought this breakout right here, right? You could have bought this breakout right here, right here, right at the EMA. The reason why I would buy this breakout is because the EMAs are right there. Normally, if it's breaking out too far on top of the EMAs, I won't. But if it's this tight, you guys, if it's this tight of a squeeze with the EMAs right there and it breaks out, hell yeah, buy that. Strong move up, flag off the 8, add to your position. Rips. If you didn't sell up here like a greedy pig, well then you'd have to sell right here on the first candle that closes below the 8. But who doesn't sell up here? No, I think it's going to 2,000. Oh yeah, well, good luck with that. Maybe it is, but still. This thing, you never know. This or SMCI. So yeah. And then strong move, very steep, high, tight flags off the 8. Notice the volume on the breakout, like I was saying before. This makes the flag off the 8 even more attractive to me. Look, you guys. Look how strong this breakout is right here. That tells me there's eyeballs. Eyeballs. Look at, compared to all this. Accumulation. Super strong breakout. There's eyeballs watching this. Strong move, flag off the 8. Strong move, flag off the 8. Now, I wouldn't trade this flag off the 8, but hey, look at it go. And then after 3 flags off the 8, comes back to the 21. First pull back to the 21. Long. It's just, yeah, and also, you guys, it's just, this tells you, like, hey, because you know what you don't want to happen? If you think of, like, my trade on SMBI, right? SMBI, I was hoping it was finally going to, like, push, not be a pussy, but SMBI was really just, didn't have much volume coming in after that huge one green day, but that's why I got tricked on it, right? That huge one green day had massive volume. I mean, it still might work. I didn't take it off yet because it's still holding trend, but it's taken a lot longer than I would like. But that you always want to make sure that the move that you're planning on trading has eyeballs on it. How do you know it has eyeballs? Well, high volume on the breakout. That means there's a lot of people watching it. FYI, guys, SMCI, super clean chart. 0 resistance above. If you have no resistance above on the daily or weekly chart, and you get lucky enough to find setups with clean charts above, dude, please don't kitty cat out. There's no resistance. It's just going to go and go and go, especially in a hot sector like technical. It's just, guys, the tech sector. Look at this. The 8 crosses over. It's in a squeeze this fucking whole time. Squeeze. The squeeze fires, and it just goes. Flag off the 8, flag off the 8, flag off the 8. No resistance anywhere over here. No resistance means do not sell. Do not sell. One of these trades can change your life. Change your freaking life, dude. Look at this. This stock was at $40 right here. If you bought 1,000 shares, you're up 220 grand right now. Fucking change your life. One trade. Clean chart. Perfect squeeze. Flag off the 8, flag off the 8, flag off the 8. Ba, 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 ba. I'll go over, guys, another way that you can also trail without the EMAs, which a lot of people like, and I do like it too. I'll go over that later. Trail your stop with market structure. All right, what is perfect EMA structure? I'm sure you guys already know this, Perfect EMA structure is when the 8 is on top of the 21 is on top of the 34, and the 34 is on top of the 50. Now, guys, remember what I used to tell you before. Also want to pay attention to the personality of the ticker. Which EMA is it pulling back to most frequently? All right, look at SPY. Do I want to trade SPY off the 21? No. Why? Because SPY loves the 50-day. Look, loves the 50-day, loves the 50-day, loves the 50-day. It loves it. It loves it, man. Even to the downside, it still loves the 50-day. SPY loves the 50-day. That's the personality of the SPY. It loves the 50-day EMA. Now look at this. Look at NVIDIA, you guys. Look at NVIDIA. Down here, pull back almost to the 21, pull back to the 21, pull back to the 21, pull back 21, 21, 21, 21, 21, a little below 21, 21, 21, 21. What is the personality of NVIDIA? NVIDIA loves the 21 EMA, so do I want to trade NVIDIA off the 50-day? Fuck no. NVIDIA ain't going to the 50-day. Well, maybe eventually, but guys, the personality of the stock will help you. Take a step back and see what's going on here, right? But still, flag move up, strong move off the 8. This is some of my favorite when you get the under-over reclaim. That's really nice. Or like the hammer candles. If this was a hammer candle, it'd be even better. But I do like when it goes down there and reclaims it. And then you go long, put your stop below. Position of EMAs. Perfect EMA structure. The more fanned out they are, the stronger the move. But also, the more extended the stock is getting. So be aware of that, right? This right here is perfect EMA structure. The 8 on top of the 21, on top of the 34, on top of the 50. It's in a massive squeeze. It breaks out of the squeeze and it just rips. Flag off the 8. But up here, guys, look how far it is. Look how fanned out these are. That's getting more risky and more risky when they're this fanned out. That means it's super strong, super extended. The more fanned out the EMAs are, the more extended the stock is getting. And again, though, first pullback to 21.34. This is the problem with buying the first pullback to the 21.34 when they're this fanned out. Guess what? The risk is too big because the move was already so strong. The EMAs are so fanned out. You can buy it at the 21, but you have to risk off the 34. It's fucking... You could get stopped out by 10 points, and it could still be super bullish on top of the 34. Remember, the 34 is the cutoff guide for me. 34, 50, anywhere around there for bullish and bearish guide. Once the stock is below the 34 or 50, it's not really bullish anymore. All right. Adding the squeeze to EMA structure. Stacked positive EMAs plus the squeeze. Guys, the squeeze is a buildup of energy with entry near the 21. When stocks are in a squeeze, that means the Kettner channels are inside the Bollinger Bands. That means the stock has gotten so tight that it needs to release its energy. And guys, the reason why these work so good is because the options, what we were talking about before, options traders, options market makers price in expected moves. The squeeze can push the stock past the expected move. That's why it works so good and you get these huge option gains. So, look, if stock's in a squeeze, you want to get in as close to the 21 as you can. Stock's in a squeeze, you get in as close to the 21 as you can, and then ride it up. But really, anywhere above even above the 34.50 is still super bullish. Look at how these look like guitar strings. When the daily EMAs look like your guitar strings, that's super bullish. Super duper bullish. When you could play these like a guitar, fucking C, D, E, F, G, I don't know the chords, but whatever. When they're about as spread out as a guitar, that's a perfect uptrend. Perfect. Stacked EMAs plus 5 dot squeeze, entry near the 21. Guys, you want your squeeze to be at least 5 dots so it's consolidated long enough to build up that energy. Again, you get in near the 21, and you ride the squeeze up. Strong move up, flag off the 8. First pullback 21.34, bounces again, and then it starts to lose the EMAs, and then it starts the bearish downtrend. Here's another example of that squeeze. I don't know why, but look at this squeeze. Literally, if you could have got in right near the 21 right here, good, but still sitting flagging right on the 8, I'd still take that. Boom, it explodes. Causes a greater than expected move. That's why the options go up 1,000,000% right here. All right, let's see. And then, oh, here's that roadblocks what I was talking about, guys. I wanted to show you this example because look at this squeeze. This squeeze is amazing. And yes, it's right on top of the EMAs. Perfect squeeze, perfect long, but this is right here. Now, guys, don't get me wrong. You could have traded it from 40 to 43.50 and made a nice $3.50 trade getting out right at the upper trend line. But I personally just happened to look for more huge trades and didn't like that that trend line was right there. So yeah, that was perfect. It just had the trend line too close. So that's why I didn't like that. Because this now could come all the way back down to here. Who knows? All right. Reversal trades using EMAs and triggers, guys. All right. Downtrend commencing. 8, crossover to 21.34. First pullback to the 21.34, right? But, guys, look, I like this trade. I would take it right here. I would take it right here, risking above there as soon as I saw it start to reject. Or you trade the trend line trigger or the fake breakout. Multiple triggers at that setup. Now, comes down. Strong move up, flag off the 8. Second reversion to the mean right here, 21.34. Also, trend line break, fake breakout, trade. Or you could take it right here with a wider stop over the EMA. Depends what you want to do. You just won't have as good a risk reward. Now we get extended from the 21.34, right? Or even extended from the 8. Fake breakout, trend line break trigger, back to the 21. Right here, triple top. Is that something else? Yes, I didn't talk about that. That's like a head and shoulders, triple top, whatever. It's a clear level of resistance. We break the trend line, trigger, boom. The EMAs are tangled, so you think even if this is trading in a range, you can trade it back down to here. Remember, guys, when the EMAs are going sideways, that could be a sign of the stock trading in a range. But right here, we cross down, start to commence the downtrend again. Now, what did I tell you before? This is a reset of the trend because it digested this move. Now, the 8 crosses down, first pullback to the 21.34, trend line break trigger, fake breakout trigger, short. Second pullback to the 21, trend line break trigger, short. Now, extended from the 21.34, fake breakdown. Extended from the 21.34, you can trade it back to them. It's just combining everything you know, especially if this is down at a support level, right? Stocks can only get so far away from the 21.34 before they want to come back to it. And I'll show you another trick to that later. Oopsie. All right. Here's another example. 8 cross below. We go up here. We got first pullback to the 21.34. Like couple pennies, fake breakout. Comes down. Now extended away from the 21.34. Fake breakdown trigger. Trade it back. Now we first pullback to the 50-day because this is SPY we're talking about here. So you can also trade off that one. MACD curling down, you guys. Squeeze, firing to the downside. Also, it's in a range and it breaks to the downside. And you know from looking to the left that it likes to reject the 50-day. But this is more about extended away from the EMAs. Fake breakdown, back to the EMAs. So many pullbacks to the EMAs and then it fails. That's why I don't keep trading the same thing. Now, the EMAs crossed over, you guys. We talked about this one before too, I think. First pullback to a pivot plus the EMAs, and it goes. It gets too far off the 21, 34, and 50, and it breaks the trend and comes back to it. And then ultimately ends up losing it and starting a fresh downtrend again. Clues that I use to help me. Reversal volume, speed up in price, 3+ days in a row, fibs, percent of rejection bounce the last time the stock was at the price level, and volume gaps. Guys, look at this. Parabolic speed up in price that I traded, or you might remember we traded this. Volume reversal plus 3 green days in a row. Clue after clue after clue. for me to take that trade. Unfortunately, I should have taken the same trade on NVIDIA the other day, but I missed it. Idiot. Reversal volume. It doesn't always happen, but when it does, it's a nice clue. Look, reversal volume. Reversal volume. Reversal volume. Reversal volume. When you see that at a key level, guys, that's a clue. That says, hey, tons of buying and selling happened. Stop, Scout, ran. Tons of fucking volume exchange. So I could pull back from here or reverse direction from here. Not to mention if you extended a mile off the 8 EMA or the 4 EMA when you're down here. Extended away from the EMAs, reversal volume. Extended away from the EMAs, reversal volume. Look, reversal volume. Reversal volume. And only the second reversion to the EMAs. And reversal volume at the lows. So, pay attention to reversal volume on all time frames, you guys. I talked about this many times on the 1 minute chart, intraday, 5 minute chart. Reversal volume. It gives you a good clue. Fibonacci retrace. Knowing how far a stock can bounce if you get a reversal setup can easily go to 38, 50, or even 61 fib. So if you're going to trade a reversal, let's say guys, let's say you want to buy this at support right here. You saw all this support and then you got the fake breakdown. Where can it bounce to? Well, it can bounce back to the 38, 50, 61, maybe some pivots, maybe supply. But you have to know all that, right? You have to know all that when you're trading. Look at this right here. This stock got extended from the 21.34 and then you bounce it back to the 38, maybe the 50, maybe the 61. But you have to be aware of that, how far they could bounce or how far they could drop. Fibonacci's help with that, not only just to enter, but to know where your targets could be. And also can use, on flags, you can use Fibonacci extensions like I was talking about earlier. This is just another example. Extended from the 8 EMA, there's a gap, big gap at the 8, gets extended, reversal volume, you take the long, maybe you can target the 38, 50, then the 61. But remember guys, we know, based on the secret setup, that the 61 to 78% fib is lower high position and gets hit a lot. So, maybe that's all up to you where you want to target, but leave some on maybe for 61, 78% fib, right? Again, look right here, reversal volume. Reversal volume way off the fucking, this gap's a mile off the 8. You think it's just going to open and start selling off more? Leave the EMAs way up here? No. Not going to happen. Reversal volume comes in, squeeze back to the EMAs. And also, if you move your fibs down here, it's probably back to the 50 or 61 fib. So you don't always get it, like right here. You didn't get a little reversal volume. Guess what, you guys? You don't have to take it. Don't take the trade if you don't get reversal volume. You can build your system however you want. I only long on extensions away from EMAs if I get reversal volume. And if the fucking gap between the 8 and the price action is yay big. Whatever you want to do. All right. Percent strength rejection. Last time we were at the price. We've talked about this a million times. Look at this, you guys. Chewy. 44% drop. First retest of that level. Of course, this shit's on a supply there. It dropped 44% from there. Speed up in price. Also, fake breakout trigger. Multiple confluence at that level. Look, 1, 2, 3, 4 green days in a row. Speed up in price. Fake breakout trigger. Fucking into this massive supply resistance. Where we dropped 44% last time. Hey, maybe you don't want to catch the top. Okay. Bounce. Fib bounce. Short it right here. Risking up there. Look. All the way down to the end of the world. Why? Because this is such a huge supply zone, because that's how far we dropped last time. Right? And now look how far we bounced from here. So yes, come over here. We're bouncing from there again, back up. I'll go, guys, I have a bonus, a little bonus supply and demand thing at the end, so this will help you understand this better. 37% drop shows heavy supply. Comes back up to it. This is actually the first retest right here, fails, and then retest the highs again, and then fake breakout trigger, also stuff candle, and extended from the 21.34, extended from the 8 into this massive 37% supply zone, and then boom, it just tumbles because that's just a strong level. That's why it dropped so far from it last time. You know, it's not like it's like from here where it's like dropped 5%, came back to it. It dropped a friggin' lot. It hasn't been retested yet. I'm like my mother, dude. I lose my voice like a friggin' pussy. I don't know why. My mother talks for 10 minutes, she loses her voice. Guys, 37% drop. Comes back to it. This one was probably even better. It didn't make it all the way up. It did make it into the supply zone. This one goes through. Massive spike, but then it fails back below. That's really a fake breakout on the daily chart. But you can't risk above the high. Well, you can. You kind of can. Because if you got in right here and you risk $15 or $10, look how far it dropped. But still, you can always get a fib bounce. Now, it would have been better if it bounced more to the 50, 61% fib. But just know, for your longs or for anything, for targets, whatever, it's hard to break these levels that the stock has dropped massive from last time. Upper trend line target, guys. One of the biggest things that I friggin' use in my trading, the trend line targets. Look, last time mRNA was here, 68% bounce up to here. Comes all the way back down. Bottom tail, fake breakdown of the level. Long. Where's my target? Upper trend line target. Fuck yeah. It all starts with this support, with this big, huge drop back to where this support came from. Now, would you try to short this level because it dropped 60% from here? No. Why? Because there's an upper trend line above it. So one thing can cancel out the other, you guys. You don't want to have any conflicting stories. Yes, I want to buy this here because there's an upper trend line target and because it bounced 68%. But do I want to short this at this level right here? No, because there's an upper trend line target. That's a conflicting message. Don't buy conflicting stocks. Only buy and short stocks that have all the same message. Don't buy conflicting messages, you know? Fucking, that's a no-no. That's an ultimate no-no. Conflicting messages are no good. You want all the messages saying the same thing. I love my wife, I love my wife, I love my wife, I love my wife. No, I'm just kidding. You want everything saying, pointing in the right direction. All right. Next. Volume gap. Not heavy consolidation zones on chart. Think easy up, easy down. Guys, when price falls like this, when price falls straight down like this, there's not a lot of trades being done in here. There's not a lot of consolidation to stop the stock on the way back up so it can easily go back through that level. So when you've got a nice long setup and a volume gap above, that's the fucking money, Tony. Right? Look, volume gap. If price starts to curl back up right here and goes past this high, it's in a volume gap. Easily can't. The price just sold off too fast there. That's a volume gap. Look at all this consolidation. No volume gap. This is a volume gap. That means if you had your volume profile on, there wouldn't be a lot of blue right here. It would be very small because that's just price just fell through there so easy. So that means if we enter back into that zone, we can easily go up and all the way through the volume gap. Here's another one. DKNG. Look, as soon as you get over this level, riding up the EMAs, now it's in a volume gap. It could go all the way up to here, no problem. There's not a lot of heavy price action down here. There's a little right here, but see this? Easy. No high consolidation levels to fucking stop the stock. Volume gap. And that's why it's starting to go. Everybody can see that there's a volume gap there. Now, if you bought this right here, look, double bottom, 8 crossover, first pullback to the 21. Look at this. Or you bought the squeeze right here on the EMAs, knowing there's a volume gap above. You're still holding, waiting for the volume gap to get filled. All right, guys. Options or shares? One simple question. Is there enough volume in the options to trade them? If the volume is thin with wide spreads, then I have to trade shares. If there is at least a couple hundred volume and tight spreads, I will trade options depending on what size this stuff is going to be. If there's only a couple hundred volume, you're trading 100 contacts, it's not going to work. If you're taking 10 contracts, there's 200 or 300 volume, you can usually get filled if the spreads are small. But you need to be able to get in and out of your position with ease. This goes for shares as well, you guys. If the stock trades very low volume and has a spotty chart and wide spreads, then I'm not going to fucking trade it at all, probably. Not shares or options. And also, guys, remember to check the earnings date. You don't want to get caught in a nasty gap down. Always remember to check the earnings date before you swing a stock. Swinging into earnings is just gambling unless you have a nice cushion and no chance of that stock gapping below your entry price. Also, check if there's any announcements coming out soon or anything going on with the company's fundamentals that could cause a gap down. Analyst downgrades, change in forecast, earnings forecast, lawsuits, whatever. Just, you don't want to get stuck in one of those if they're coming soon. The other thing I check, guys, the only other thing I check is stock's beta. Beta is a measure of a stock's volatility in relation to overall market. A stock with a beta of 1 has the same volatility as the stock market. A stock with a beta of above 1 has a greater volatility and greater expected returns. Basically, if you want your stock to rocket, then the market is going up. If you want your stock to rocket when the market is going up, you want high beta names. If you want your stock to do nada, then buy low beta names. It'll just fucking tinker around. Won't go up. All right, entries. Extensions. How do I enter stocks, guys? I enter on extensions, patterns, and of course, triggers. All right? If I'm watching a setup, the 8 crossover, first pullback to EMAs or something, right? Or support level, whatever the setup may be, I want flush to the level. That's one of my ways to get in. Extension, right? That means something like this. The stock dumps on the 10-minute chart really hard down, comes down to my key daily level, and then you see the bottom tail trend break trigger, I'm long. Stop can either go below this trigger, but you don't want it below. You don't want it above the key daily level you're trading off of, or the EMA. So be aware of that. Even if you get in on the trigger, put your stop below that. Unless this happens right at the same place, which is perfect. Let's say the 21 on the daily is right here. Flush it down to the 21, boom, trigger, yes. Now you can put your stop below. Even though you still could get wicked out later and then it could still reclaim the 21, but hey. I'm not talking about stops right now. I'm talking about entries. How do I enter? Extensions and trend breaks, or just extensions and huge bottom tails. Anyway, on extensions. I love entering on extensions. Extensions, just like AVGO. Speed up in price, trend break on the extension, and then it's on and popping. Stop goes above. In this case, stop goes definitely above because there was no daily levels anyway. That was a 12% extension intraday. Massive speed up in price relative to how the stock was moving. So I enter on the trend break. And then hold it overnight. There's another one. Stock gaps down. Now we have a big gap. Also flushes at the open into a level. That's a big extension. That's a gap down plus a big extension. So trend breaks, enter. MACD crosses over, starts helping you out. Secret setup long, and we're off to fill the gap. Trend line break on the extension. MACD crosses over. Secret setup long. Fill the gap, and we're out. Now we're shorting at the gap fill. Beautiful. Guys, CVNA, we were talking about this. I was just about to start the review, and I fucking was staring right at it. Look at this, you guys. Look. CVNA, 1, 2, 3, 4 green days in a row. Reversal volume, extension way off the ADMA. Extension off the fucking, I put 5 minute, but you can use 5 or 10 minute EMAs for the trend break and the massive overnight short. Damn it, damn it, damn it, damn it, damn it. Idiots, where are the bats? Speed up in price, look. It's parabolic, extension, trend break, daily chart, way off the ADMA, way off the 4 EMA, which is even better, look. Also, 4 EMA on the daily chart, reversal, cheat code, you guys. Dude, when a stock comes off the 4 EMA, it comes back to it. Comes off the 4 EMA, comes back to it. comes off the 4 EMA. It takes literally within 1 day, it comes back to it. Comes off the 4, comes back to it. Little gap in the 4, comes back to it. Comes off the 4, it comes back to it. Stocks cannot stay off the 4 EMA for more than 1 day. The 4 EMA is too tight, too fast of a moving average for the stock to stay off of it very long. That's a reversal cheat code on the daily chart. Reversal cheat code on the daily chart, you guys. Never mind the reversal volume here. I cut off by accident. Look, you guys. Look. Reversal volume on NVDA. Off the EMA, off the 4 EMA, come back to it. Reversal volume, NVDA. Third day in a row, parabolic move up in price. Off the 4 EMA, it comes back to it. AI, even a monster AI with fucking all the hype in the world. Going up, gaps up, comes off the 4 EMA. Going up, gaps up, comes off the 4 EMA, comes back to it. Going up, gaps up, comes back to the 4 EMA. Going up, rips, gaps up, comes back to it by the next day. 1, 2 day, dude. This is, look, gaps up to the 4 EMA, dips into it, rips, comes back to it the next day. Look, huge spike, comes back to it. Huge spike, back to it the next day. Can't stay off it for long. Huge dump, back to it. Spike, back to it. The 4 EMA on the daily chart is your reversal indicator. It is unstoppable, undefeated, cannot lose. Stocks cannot stay off the 4 EMA. Say it. Stocks cannot stay off the 4 EMA. All right. Patterns, you guys. Patterns. This is the second way that I enter my trades. Swibby came down, flushed towards the 8 EMA, I think it was, I forget, and then gave me a pattern. I could have entered on the flush right here. It wasn't that big because, look, this was yesterday, this was today, so it was only a little dinky move today. But then I saw the wedge, then the EMA's crossover, the squeeze, the MACD, 10-minute chart, boom, I'm long, risking off my daily level that I'm trading off of. If that's at this level, then it's below that. Patterns, guys, is the second way I enter my swings on the 10-minute chart. HD, wedging, squeeze, MACD crossing over, breakout, long. You can enter at support on the fake breakdown, or at support right here, or on the breakout and pullback. Remember, guys, I don't buy the breakout unless it's right on the EMAs. So if this breaks out and then dips, now the other thing you can do, once this goes back through the open price, you buy it with your stop at lower day. Or you can buy the dip towards this trend line, put your stop below the EMAs. There's many ways you can do it. It's just all about risk reward. I prefer to get in right here, or as soon as I recognize that this is a wedge. Basically, guys, look, I would basically get in right here because I knew I had the upper trend line target. So I would get in right here and then either sell a little right here, buy it again for the breakout, or what. I prefer to get in at support as opposed to the breakout, but the breakout's fine too if you can get in close to your daily EMAs. If it's way off the daily EMAs, the only other way you can do it is a dip, reclaim of the open price, go long, put your stop below the fucking that level. But you can also find that in all my videos talking about that way to trade. In the swing section, I talk about that. There's another one on MTCH, a very tight wedge. I believe it was right at the 8, and it gives you the friggin' break. Boom. You can get in on the wedge, squeeze, and you can get in on the, knowing that the MACD is in an early phase of the crossover right here, and you have a flag pattern. But guys, very important, if you're trading off your key daily level right here, if this is your key daily level, you don't buy this right here and then stop out right here. No, just because you're buying a pattern intraday doesn't mean your stop is going to go below the above the fucking key daily level. I'm just looking for an entry, but I'm still trading off the key daily level for my stop. So, I mean, you could try. You could definitely buy this right here and jam your stop out with size and then hope it doesn't go back below it, but that'll be choking out your trade on the daily chart. Maybe you could just stop half out and then use the rest of the size, but that's just... I personally would get in, put my stop below the daily level or the EMA that I'm trading off of. Again, plug another friggin' wedge I think this was at the. I should have put the daily chart too, but I think this was at the 21 or the 8. I forget. Flagging off it. Hold on. Let me tell you right now. Yeah, that was like first pullback to the 8.2134, I believe, and then it made this nice tight wedge. The EMA started to cross over. It's in a squeeze. The MACD obviously crossed over right here, so early phase of the MACD crossover, and then long for the swing. Stop below the daily level, or EMAs that you're using. BA is another one. I love when a stock is sitting on the daily chart on the 8 or the 21 and making this pattern intraday. Right, knowing that the 8 is right here or the 21 is right here on the daily chart and it does this, I'm all about it right there. I'll buy this right here, I'll buy it right here, buy it right here, or buy it right here. Put my stop below and just freaking let it rock and roll. Triggers. Hey, good old Chewy, the biggest piece of crap stock on the planet. Can't make up its mind. So I got long right here, guys. Chewy flushed into the 21, I believe it was. Was it the first pullback? Sorry, guys. One sec. Chewy was a big flush into the 21 and 34, and on a nice flush extension. As soon as it broke the trend, I got long. Put my stop below here because that was also the 21.34. It goes up. I didn't take profits because I'm not a kitty cat. It came down, goes up, it came down. Now I start to notice another triangle pattern that I don't like, so I get stopped out right here. And then it does this fake breakdown, which would automatically make me get back in most times if I like this piece of crack stock. But by now, look it, I wouldn't have taken profits up here either. It would have came all the way back down. Now who knows what it's going to do. But guys, if you didn't get in on this, the point is if you didn't get in on this trend break on this extension, now you have a pattern with a sick fake breakdown trigger to long right here. Boom. Long. And guess what? If you got in on this right here, that means you would only have a 36.75. You might only have a 50-cent stop. That means, guess what, you guys? That means you have 1, 2, 3. You could take some profits up here at 3R and let the rest run. We'll get into that soon. Fake breakdown trigger. This blue line is the ADMA on the daily. Flag off the 8. Fake breakdown trigger intraday. Long. Stop goes below. Boom. Because I was just looking at the bigger picture trade on the daily chart. Wanted to rock and roll. I don't usually take profits at 3R, even though I'm teaching you guys you can. I like the big trades, boy. Big trades. I can't stop answering Adam. I don't know why. I got problems. All right, so fake breakdown right at the ADMA on the daily chart. All right, here's another one, guys. Here's the 21 on the daily chart, right? It's right here. We got a fake breakdown, 10 cents above the 21 on the one of the flagging off the 21. Fake breakdown trigger long. So you can use extensions, patterns, triggers. Extensions, patterns, triggers. Here's a daily chart setup on net. That was amazing after I already fucked this trade up. Here's a really great level of support. Fake breakdown, reclaim. That's a trigger to go long, and then it rips all the way up to 70, which ultimately it went to the trend line that I was targeting. It just shook me out before that. The best trade on this right here was probably well, this one wasn't. This one was a rocket, but problem is it filled the gap right here. Plus, it was in lower high position, so you can still take it. But this was the best trade right here. 8 crossover, made a new high right here, and then pull back to the 21. You buy it, push back up. ZS, a fake a break it down right at the 21.34 on the first pullback to the 21.34. A support level, a fake breakdown, long, boom, and that thing gave you like literally if you got in right here, at 142, risking the low of that, still gave you a pretty sick trade. Risking the low of that candle. Obviously, it would have been better if it kept going, but this thing's tricky too. they put out their price upgrades right here, and it dumped on your face. U was one of my favorite looking stocks, and I didn't take the trade because I was long so many things already. I was a little nervous. But guys, look, trend line, upper trend line target, and you see a pattern developing like a wedge. Trend line right here. First pullback to the 21, second pullback to the 21 with a sick hammer candle. Oh my God. Oh, fake breakdown trigger plus under over hammer long. Target that upper trend line and then let the rest go. Amazing. Amazing, amazing, beautiful trade. Just like, I don't know. Sometimes when you got like 6 swings open, it gets a little hairy. Especially when the SPY is fucking like going and going and going to the end of the moon too. NIVDA, we talked about this a little earlier. Strong move up, first pullback to the 8, fake breakdown, under over reclaim. Long, as soon as it reclaims the 8, boom. So be watching those triggers on the daily chart, intraday, everything. Look, guys, NIVDA. Strong move up, flag off the 8, trend break trigger, long. Strong move up, flag off the 8, trend break trigger, long. Now, we don't try the third pullback. We try the first pullback to the 21. Unfortunately, if you waited for the trend break trigger here, it gapped up $1 million on your face. But now again, second pullback to the 21, hammer candle plus trend break trigger. I would just buy it as soon as it came back over the 21. Put my stop below here. I would probably do the same thing here too. When it came down, came back up, was about to close right at the 21. I'll just long it. Put my stop right there. Trend break trigger, trend break trigger, trend break trigger. Guys, do you know that 1, 2, 3, 4, only like 10 people showed up to this, even though like 40 people signed up? Slackers, slackers, slackers. And I'll be able to tell how many people watch the YouTube too. Yeah, look how many people are on the mic. 1, 2, 3, 4, 5, 6, 7, 8, 10, 13 people. I don't know. Look at this. Strong move up, flag off the 8, trend break trigger. But this is even better. Don't wait for the trend break trigger if you get this under over reclaim. This is beautiful. Beautiful. Boom. Long. First pullback to the 21. Fake breakdown trigger plus trend break trigger. So you can long it right at the 21, especially if you get this fake breakdown. Boom. Full pullback 21. Trend break trigger. Fake breakdown trigger. Support. Boom. Stops. All right. Stops. Flush to entry price with trigger. If it's a flush to entry price with a trigger, risk below the trigger. Unless the friggin' daily level or EMA is so far away that it's like, very close. If it's too far away, you got to risk the trigger. If you're getting in on a pattern, risk below the pattern or the key level on the daily if it's close enough. And if it's too far, you shouldn't be taking the trade anyway. You can also risk below the 34 EMA on the daily. This is a bullish and bearish guide. A candle close below the 34 on the daily chart. If it's an under over hammer candle on daily, risk to the low of that candle, you guys. Targets. Don't be a kitty cat. First target, minimum 3R. Trail stop with a candle close below the 8 or the 10 or even the 21 if you have big kahunas. FYI, if you trail with the 21 on the daily chart, you will have huge wins sometimes, but you also have a lot of profit give back on some trades because you might have been up in and it fades all the way back to the 21 and breaks and you get back $10 a trade. But then you have those trades like Netflix, you would get 600 points. Also, you can trail stop with market structure, which I'll show you how to do that soon. All right, so guys, look, on an extension, trend line break trigger, here's your entry, here's your stop. Unless the daily level is like right here, then just put it below that to be safe. Target, now how do you calculate your target? Well, if your entry's here at 170 and your stop is here at 160, your first target is 3R, you take some profits, you let the rest go. Using a trailing stop. Mac wedge with squeeze and MACD on cost, right? Came down to here. Here's the key daily level. Now you can put your stop below the daily level. I would just put it below where the price action went to. So basically, it breaks out and the wedge is sitting right on top of the EMAs. You buy that, you put your stop below here. That means your first target will be up here. So you were risking 24, you got in at 28, you're risking $4, 4, 8, 12. That means your first target's here. Now you trail the rest. Again, guys, this is literally, oh, I fucked up the spelling. This is literally about as good of a setup as you can get. Guys, when you have the EMAs and a proven daily level rate next to it, guys, you could have taken this trade right here with 50 cents risk and got literally fucking how many hours? This is my favorite kind of setup. CVNA did this and OSTK did this where it came up, it pulled back, it came up, it pulled back, it made a high or low right next to this level. So you can buy right at the 21 with your stop right below here and get 20, 30, 40 hours on this trade. Even if you trail with the daily 8, you still, I mean, obviously, who's not going to sell some into this extension? But if you leave the last third on and you cut it because it closed below the 8 right here, you still have a huge trade. Just like, guys, Match did the same thing. That's why I got back in Match. Amazing. Not only this trade, look at this trade right here. Comes right down to this support level. As soon as you see it bounce off, you go long. You risking right below the support level. Look at this. You could have got in right here. Entry. $40.50, you'll say. Say you're risking 50 cents, right? 1, that's 2, 4, 6, 8, 10, 12, 14 hours, dude. It's still going. And that's if you got in up here, not down here. And I believe CVNA did the same thing. Guys, you have to realize, look how quick 3 or 4 hours comes. That's why you don't want to just get out at 3 hour in these swings. 3 hours comes so fast and let the rest go. All right, guys, this is how you use EMAs, the daily EMA. If you get in at the 21, you're using a candle close below a 34 for a stop. Entry at the 21, you can use candle close below 34. Entry, candle close below 34. As you see, when they're fanned out like this, the EMAs, it's hard for them to break the 34, so it can give you a huge trade. You'd still be in it. You wouldn't have got stopped out yet using the 34. Now, if you're using a strong move up, flag off the 8. Look, comes back, hits the 8. You stop. Guys, normally I would put my stop, as soon as I start to touch the 8 and start to trend, I put my stop below. But you have to think, hey, it's normal for a stock to break out and retest the breakout level. So you know what? I'm going to put my stop below there instead. That's smart thinking. That's what I should have done on net. Net, I knew it could have wicked down to 60.50. Broke up and touched that level and ripped back up. So I knew I should have put my stop below 60.50. And I didn't do it, and I got punished for it. So that's your risk. 3 hour comes quick. Boom. Now you're trailing with the 8, and you got stopped out right there. If you use the 21, you wouldn't have got stopped out till right here, but you might have sold most of it into that huge push towards 350. Problem is, like I said, the 21, you get back more gains, but you have huge wins too. Guys, this is what I was talking about on CVNA. This was like, literally could have been one of the best trades of my life. Could have been even better than cost. Well, not dollar-wise, but guys, I literally got in right on the squeeze at 10. I think it was like $10.50, risking right up below $10 because that's the whole psych level. It's riding on the EMAs. It shows you a pattern. It's above the bullish structure. You don't stop out above the bullish structure, so you stop has to go below the bullish structure. But even still, you got in at $10.50, risking like $10.50. Guys, look at this. 3 hour. That's how fast 3 hour came. And I sold some into here. I bought it again on the 8, sold the rest into here. And if you use the 21, you're still in it, all the way up to there. If you use the 8, you would have got stopped out right here. If you use the 21, you would have sold probably into 40, 45 like a hero. So that's fucking that's a thing. When you have this tight range and you know you can jam your stop up real close, you can take twice, 3, 4 times as much size as on a dollar risk trade and boom, change your life. One trade. All right, guys, if you're going to do it, if you don't want to use the EMAs to trail your stops, guys, what you do is use market structure to trail your stop. A lot of people trade like this. It's a very good way to trade. you don't pull your stop up until you make a new high. So let's say you bought it right here on the EMAs. Original stop is right here. You break out. The last pullback after the breakout, your stop is already there. Now the stock pulls up. It breaks out again. It makes a new high right here. You move your stop up to the last pullback. All right? Now we're going. We break out again right here. We move your stop up to the last pullback. You don't move your stop up to the last pullback until after the breakout. Now, stop's right here. The stock broke out. We're going out. We break out right here. We move our stop up to the last place we pull back to. Now, stock broken out. It comes down. We break out again right here. We pull our stop up to the last place it pulled back before the breakout. We still never got stopped out on coin if we did that. If we used the candle close below the 8, we never got stopped out either. But that's not always like that. That's the 4-hour chart, so never mind that candle close below the 8. That's irrelevant. That's for the daily 8. But look. Now look at this. I don't know why I did these all 4-hour charts. Doesn't matter, but just to get the point. Strong pullback. Original entry is below the EMAs. You don't move that stop until you make a new high. All right? So right here, you make a new high. Right here. But you're already at the right place. So stock pulls back. Now, right here, we break out, make a new high. Your stop goes back to the last place it pulled back to. Now, right here, we pull back, we break a new high. That means you pull your stop up to here and you got stopped out right here. You guys get that? If we didn't get stopped out right here and this broke out right here, our stop would go right here. So you guys, I hope you understand that. Here's another example, all right? Original entries. Original entry, flag off to 21. Original stop right here. Break out to new highs. Your stop is in the right place already. We break out to new highs. You pull your stop up to the last breakout place. We break out, we pull back, we break out again. Stop gets pulled up to the last breakout place, and then you end up getting stopped out right there. That's how you use market structure to know where you're at. That's how you use market structure to know where you're at, where to stop out. All right, guys. Now, bonus round. Supply and demand, which I didn't finish all the slides for these, but I don't need to. I can freaking tell you. Guys, what is supply? Supply is an area of aggressive selling. It's a strong move down, showing big red candles from a zone. What is demand? It's an area of aggressive buying, showing a strong move up, big green candles. You can use supply and demand zones on daily, 4-hour, 1 hour, and 15-minute chart. You can use EMAs and market structure to keep you on the right side of the trade. So as you can see here, guys, look, strong move up, big green candles, shows you demand zone. The market comes back down to the demand zone and pushes off of it. Look, strong move down. Where did it start from? Shows you supply zone. The market comes back up to the supply zone and falls back down. The way I mark my supply and demand zones, you guys, is wherever the move starts from, I like to use the candle in the opposite direction. The first candle that was in the opposite direction. So if the move started from here, that's the demand zone. I'm using the red candle right where the move started from. Now, if this candle was green, I would start the zone up here, down to the lows. Supply, right here, right? This is your next target. If you buy, if you make your demand zone and it comes back to it, and you buy in this demand zone, you put your stop below the demand zone, and you target the next resistance or supply zone. Obviously, it breaks through it, but that could be your first target. Then you do everything else we talked about to get out. Again, look right here. Big, huge spike, big green candles showing demand. It comes back to the demand zone. Your stop always goes below the demand zone, and then you do your thing. Guys, this is to show you guys, do you want to be shorting at supply or longing at demand? If the stock is making higher lows, higher highs, higher lows, higher highs, then look for longs into demand. Guys, and remember, when we have a gap up, that's automatically considered a demand zone for me. I don't know about everybody else, but if a stock gaps from a level, it had strong demand there. So guess what? Comes back to the demand zone and rips. Now, guys, you can short at supply zones if you're extended off the EMAs, but it's just easier to stay on the right side of the trade by using market structure and uptrending EMAs to just be on the right side of the trade looking for demand zones. It comes back to the demand zone, you buy it, you put your stop below and let it go. So again, now in this example, look, the trend breaks. Now we made a lower low, lower high, lower low. So now where's supply? Look at this big, huge move here. Lower low, lower low. It rips back up into the supply zone. You short in the supply zone. Your stop goes above the supply zone, which I forgot to put on here. I think I started running out of time. And then you get a huge dump. But so I didn't make a million slides for these, but AI is another great example, guys. AI clearly uptrending, right? It rips out of this thing, so I used the red candle before to mark my demand zone. Stock falls all the way back down into the demand zone. You buy it in this demand zone, your stop goes below, and then you can sell it. You can use what I taught you already. Maybe you target the 60 to 71% fib. Maybe you target back up at supply. But that's how you buy it and where your stop goes. And if you guys go around on a bunch of daily charts and 4-hour charts, marking out these zones, you'll see like, wow, this actually works pretty good if you know how to use it in combined with trend, So yeah. Anyways, guys, that's pretty much all I got. So I'm gonna go back and look at the questions. I'll do a more in detail thing of supply and demand. You guys should know by now what it is based on the supply and demand channel. It's not really rocket science. Pretty easy, but it does work pretty great. And yeah, let me scroll back, you guys, to the beginning now, to 11 o'clock. There's not a lot of questions anyway. On your cost signals that make you nervous trading. All right, let's go back to cost. The reason why it didn't make me nervous on cost is because the pattern was so freaking clear. When the patterns are so clear, I'm like, dude, I'm not nervous at all. And we're extended off the EMAs to the downside. Remember that. When you're extended off the EMAs to the downside, it's safer to long. Once I get this back to where we go. The hell are you? Oh. So you see this, right? I'm not nervous because the friggin' pattern is so clear, and I know this is a huge demand zone, and I waited for the trigger, fake breakdown. So now I know I have a super high chance of that going back up. So I'm trading against the EMAs, but look how far we are off of the daily 21 and 34. High chance of reversal. JJ, that match was perfect. I noticed that when the stock makes a higher low over the daily EMAs, close to the top of the downtrend line, it very often breaks out on the wedge. And you're positioned a lot better than the breakout buyers. That happens in all time frames, by the way. I noticed higher low over the daily EMAs. Yeah, I don't know. I'll look at that later. I can't think of what you're talking about off the top of my head, but you're talking about match like. Oh, you mean like I see what you're saying? It hits a trend line, and in the higher low right here is really close to that trend line still. Yeah, because it doesn't take a lot of energy to blow through that trend line because it didn't drop too far away from it. Yeah, that's right there. That's exactly how you use knowledge, you guys, that you have of the overall market to say, oh, this thing only pulled back that far. It's not going to take a lot of buyers to break that now. If it pulled way down to here and made a higher low, obviously it's probably going to die by the time it gets back to that trend line again. Right? On the SPY example, you have the right shoulder highlighted, but the next time it hits that area at the right, it gaps over but fails back under the 61, bounced a little from the 8, but it's right below 61. How do you decide if you're looking for a long or a short in that area if it had a huge drop afterwards? All right, let me go back to, is that the, SPY. This one right here, right? This one. All right, on the SPY example, you have the right shoulder highlighted. So, no, this one. Right shoulder highlighted. That area gaps over, right, but next time it hits that area, gaps over, feels back on it. It bounced a little from the 8. It bounced a little from the 8 because, guys, I don't long off the 8 in lower high position. I try not to, number one. That's number one. But if I think this is a flag break and it happened more down here, I would try. I don't feel safe. If I lower my fibs down here, this is in lower high position. That's like the overall market right now. That makes me nervous to long flags off in lower high position because I know they have a high chance to fail. So, that's a tough one. You might say, okay, it made a higher high, the reverse trend. I'm going to long flag off the 8 and try to push it up here. But guess what? You got stopped out. Who cares? It happens. Still a good risk-reward trade. But also, guys, you have to remember, that was a pretty long wick. So if that wick was so long, if I got in at the 8, it's too much risk probably for me on that trade. I wouldn't want the wick to be that long. I have to put my stop below there. So, but that wasn't bad because you have the 8 crossing over, a strong move up. We made a new high. We flagged off the 8, and we touched this breakout level retest, and then it failed. Well, guess what? The only thing you had going against you was all this high volume consolidation bag holders over here and lower high position. So you got to be aware of all that shit. See, all these guys might want to sell if we get back up here. They got shaken out. Now they're going to want to sell. This whole bag holder people, they might want to sell. JJ, if you can, please go over longer term options on these swings. On a hot market, it's easy to run out of buying power and swing portfolio because of how expensive some of those stocks are. And the problem with long-term options is there's hardly any that have serious volume way out that far. Every time I look at super long-term options, there's barely any volume out there. So I end up really never doing that. But if it is, you just do it the same way. I mean, if you can find a stock that has super high volume or enough volume to trade 6 months out, knock yourself out. It's the same thing. But most of the time, you look 6 months out, it's like 5, 10 shares, volume, 10 trades. There's none. Nobody gives a shit about the future. Holding through this consolidation must be a test of patience for investors. That's why you got to just make your plan, stick to it, right? Can't watch every tick especially if you're a swing trader. If you're an investor or a swing trader, guys, no investors are watching these. I don't know any investors that watch a chart. They buy their stock, they fucking hold it forever, they check it next month. They don't watch the stock fucking move every day. If they do, they ain't going to be an investor for very long. They're going to be shaken out of their position real quick. Yeah, that's a good one. The pullback, as long as the pullback's close and I think it goes higher, the trend line don't scare me that much. As long as I think we can go higher. If you trade off the first pullback, how do you set your stop? Well, we already talked about that, right? Is it the close below the 8 or is it just wicks under or do you risk below the 21? If I trade off the first pullback to the 8, depends. If it gives me a hammer candle, I'll put it below that. If it penny touches it, I'll put it below that. If I just get in it while it's flushing towards the 8, I'll probably give it to the 21 if they're close. But, or I'll just, if it closes below the 8, then it's not working either. Stop like that. You can be creative with your stops as long as you have good risk reward. Thanks, Adam. On the squeeze, don't you want to see red? On your Apple example, the squeeze is lower light blue, but I thought you wanted either really small red, light blue, or red. The example on the RBS is what I thought. Are we talking about the Apple, this one? What time was that? 11:57. I don't know. I probably just didn't notice that. But yeah, it's better if it's red or, obviously red dots mean it's in a tighter squeeze. Gold dots the best if you have the Squeeze Pro. But sometimes it will be in a squeeze, maybe not the best squeeze, but everything else lines up perfect. So I'll still take the trade. Yeah, RBLX was definitely perfect. Tons of red dots squeeze. So on MRNA, would you be looking for a swing on the next bounce from the support zone, looking for another uptrend target? Probably not on that piece of shit, but if it was a stronger stock, a better fundamental stock, then maybe. But I don't like our mRNA's fundamentals. So the first trade was like, okay, this will probably definitely bounce, but after that, I really want to line the good fundamentals up with the setup, you know. On Chewy, if you got in, looking for another. So when you saw volume gap, do you mean there's no real chop? If it just bleeds out with no, yeah, exactly. It just flushes straight down like this. It's like just quick drop. Not a lot of consolidation zones. No heavy volume at any one price action. And usually when that happens, it's easy for the stock to go back up through it with volume, because the volume of the buying overpowers any sellers that are in here at each level. Think about it like this. Little sellers here, little sellers here, little sellers here, little sellers here, little sellers here. Strong buying here, strong buying here, strong buying here, strong buying here. Can go back through that very easy. But a lot of selling here, it's hard for the stock to go through. A lot of selling here, hard for the stock to go through. But once it gets past this level, little selling here, little selling here, little selling here, all the way down, buying can go overrule that, can out fucking weigh it and overpower it. On Chewy, if you got in at 36.50, why would you not have taken profits? Yeah, that's just because I'm not a kitty cat, and sometimes Chewy's daily chart looked too good to me to waste on a 3-hour trade, right? Chewy's daily chart was like, ooh, first pullback to the 21.34, that thing could go to the moon, to the moon, to the moon, to the moon, right? So Chewy, right here, if I got in, I'm aiming at Chewy up here. I want 52, 51. I don't want fucking 37, 38. I'm selling it. I'm selling it below the 21. I'm hoping for that wick down to reclaim the 21 and rock it. I can't sell it before it gets back to the 21. I'm aiming up here, baby. Big Willie style. 52. Look at, we got a range going on here. Bottom range. Oh shit. We got a bottom range here. Top range. It could easily and guaranteed. I don't care what it does. Eventually, we'll be back up here. Mark my words. Chewy's a good company. They're just going to get more and more popular with all the pet lovers and dog food people. This thing will be back up here before you know it. And if this comes back down here and fills this gap, I'll be long-term invested in this for the move back up here. I don't want to long-term invest now with this much downside possible, but I think eventually Chewy's going back up to there. Yeah, you better fucking pay me my 10%, Maverick. Shit. Gotcha. Is it a good idea to keep adding to a winner? I mean, I wouldn't keep adding to a winner, but I would add definitely on the first pullback or the second pullback. Just, you gotta be aware always that friggin' you're increasing your average when you do that. So you gotta, you might get stopped out more, but on the ones that run, obviously, like right here. Let's say you bought Zim right here. Boom. Now this is the second pullback. So fuck yeah. Add. Now it goes. Now your stop's going up. But look at this. If you kept adding another 21 here, you would have, by here, you already changed your life by there. Just remember, it does change your average. Because if it changes your average and it brings it up too much, and then all of a sudden you have a lot of wiggle on the stock, like, maybe like right here or something, and then you have to stop out or you want to stop out because of the friggin', because you're average. Yeah, we have a million examples. Here's one right here. Maverick. 8 cross below, full back to 21.34, short. They're all over the place. Go look at any daily chart. You'll find a zillion of them. Just happen to have one right here on the chart that I have up. Apple, after an entry on March 13th, if stop was candle below 34 on the daily, you could have rolled it for 140. Yeah, I don't candle. That's the thing, dude. That's what I mean, J-stop. But look, in this situation, right? In this situation, you would have gave back 91 to fucking. You would have gave back 40 points right here. So that takes some real balls. You're gonna have some huge winners, but you're gonna give back a lot of points if you didn't sell into this blow off top, and you think it's gonna keep going, and then it closes below 34. You gave back $40, right? So I don't like to use the 34, but I do like to use the 10 or the 21 sometimes. But that's something basically that Giannis, you're here, right? You never back tested this for me like I asked you, you fucking piglet. Giannis was supposed to go look at a million charts and tell me which trailing stop works the best, but he never did it. Nope, he didn't. Shit. He's not even here. He's pretending. If someone wants to take the time to go look at every setup and see how many odds you get using the 8 as a stop, how many odds you get using the 10 as a stop, how many odds you get using the 21 as a stop, and how many odds you get using the 34 as a stop, we'll have the answer to that question. I didn't want to do that. I don't want to do it. So I asked Giannis. Giannis said he would, but he never did. So if anyone wants to do that, knock yourself out. Here's another 8 cross below, first pullback to the 21.34 short. It's pretty much on every chart you can look at. Here's another 8 cross below 21, first pullback to the 21.34 short. Another one. Any daily chart you find, you're going to see it. 8 cross below, first pullback to the 21, second pullback to the EMAs. 8 cross below, that one went to the 50. But it's just one of those things, dude. It's just, it happens over and over and over again. Front side and long side. 8 cross below 21.34, first pullback to the 21. So 8 cross below, first pullback to the 21. That's a 10-minute shot. It's pretty much on every fucking daily chart. You'll find it somewhere in every daily chart. Net 8 cross below, stopped out. It didn't really cross below that good, but this one too though. 8 cross below, first pullback 21, kept ripping. But net, we already know, trades like an asshole. But that's why, guys, too, you just want to line things up. You want to line everything up, more things up than with just the EMAs. I mean, don't get me wrong, I love those setups on the EMAs, but if I can get a resistance level or a pivot close by too, woo! Or fucking, that with some fib levels too. Oh man, then it's really on and popping. Anyways, oh shit, I gotta scroll down. JJ, how much influence does the SPY have on your swings? Guys, I didn't talk about this in my trading, in my swing, which I almost did, but I forgot about it. SPY has all the fucking influence in my swings. All of it. I don't open swings unless SPY is a good swing too. So, guys, I'm not opening any swings unless I think SPY is a good swing. What does that mean? That means, hold on. That means I'm looking for swings when SPY is right here. I'm looking for swings when SPY is right here. I'm looking for swings. I'm looking for swings. I'm looking for swings. I'm not looking to open 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 swings. I'm looking to open swings. I'm looking to open swings. I'm not looking to open swings. Get it? That's how I always trade. That's why this last couple of weeks have been painful. I mean, this last couple of days have been painful because SPY is so far off the fucking 8 EMA. I'm not opening swings up here. I'm just watching. I mean, real investors on Chewy, like for both. I think Chewy's a good company. Bro, my 10% won't cut it for you. Oh. If you get like $1 billion, it will. That's my problem, is adding too much and being greedy and then getting stopped out. So only add on the first pullback, Adam. Or add when it gets farther away and then pulls back. Don't keep adding, increasing your average, increasing your average, increasing your average. I always have hard stops on swings, J-Star, because I can't watch every tick, I'm like in the room, I'm trading small caps, I'm doing this, I'm doing that. I either have hard stops or price alerts near my stops. One or the other at all times. But I don't want something crazy to happen in the middle of the day. Some news comes out and the stock just flushes right through my fucking price alert and my stop and I lose 2 hours instead of 1. Options, you pretty much have to just accept price alerts. You can find the theta price, but it always changes. Yeah, only at the 61 or 78 or nothing. It's a rule for me now. I don't care. Yeah, you need to get as close back to your entry as possible, dude. If you're shorting, you want to go to 61, 78% fib. If you're longing, you want to go to 61, 78% too, because that gives you a very close add to your price. You're not increasing your average too much. Yeah, it's hard on options to find the stop price. Unless you go by a percentage, right? Unless you say, hey, I'm getting in right here. If based on the delta, if the stock drops this far, I'm going to be down 30%. That's where I'm going to stop out. But that's not using the daily chart, so I don't really love doing that. On ads, yeah, I move my stop up to break even. Which kind of sucks sometimes because then you get fucking punched out, you know? But yeah, I always move it ads up to. I always move my ad up. I move it up to even once I add. And honestly, I don't really add that much in fucking swings, to be honest with you. But if I do, I move my stop up. Yeah. Yeah, exactly. Checking that means okay, I'm checking every day. Where is it opening? What is it doing compared to my daily EMAs? How's it looking like compared to the 10-minute EMAs? Making sure I have the right targets set and my stops are in place and at the right spot, or my price alerts are at the right stop. Does it still look like it's doing what I want it to do? Just shit like that, you know? Oh, guys, for whoever's watching this and can't see that question, the question was, I've heard you mention this in the past. You're managing your swings. What exactly does that mean? Are you adjusting stops, changing targets, sizing down, etc.? Yeah, stuff like that. Maybe scaling out a third. Oh, maybe I see this thing's on its fourth day up like MTCH. I want to take some profits, you know, shit like that. No, I don't have hotkeys on TD account. I just get in with limit orders or market orders and then set stops. Yeah, exactly. You can do that too if you're using lower day. There's ways to do it. That's the problem with new traders trading options. They lose 50% by accident. They didn't know they were going to lose 50% when the stock dropped. And that used to happen to me all the time. I'd be like, oh shit, I just lost 50% on that options trade. What the fuck just happened? It only dropped fucking 30 cents. The stock. The fuck? Had no idea what I was doing. For TOS, go on trade and look up the option you want. Right click and copy the name, paste it on the box. Oh, to see the chart. Any other questions, you guys? I actually that was like an hour long. I mean 2 hours long. I didn't think that was going to be. I thought it would be even longer. Yeah. Can you guys see my Thinkorswim right now? You can, right? All right. So check this out. All right. So guys, where the big move started from. This big move started from here. I used the candle before. Like this. So that would be my demand zone, right? And now up here, if the candle before, right? If you're drawing a supply zone, and the candle before is so huge, it kind of sucks because truly, this is what the supply zone should look like. Makes a huge zone, which kind of sucks. So sometimes I go like this. I cheat and pull it up to like that. But then what happens is I miss these trades. But guess what? I don't care if I miss these trades because the risk was too big on those anyway. If I had my supply zone like this, the candle before, and I take the trade right here, I'm risking this far. I'm not doing that. So I don't care that I jammed it up like this because if it doesn't get there, it doesn't get there, right? So let's go look at like some other. We'll just do SPY or whatever, like I always do. SPY. Obviously. Guys, the other thing, I don't really draw them on the daily chart very often. You can. You know, like you can, like you had a big, look how big that would be. Look how big that zone would be. That's fucking dumb, supply zone. That's why I don't draw them on here. I usually draw them on a 4 hour or 15 minute, right? So now I can be like this. Now look. Oopsie. So I know like that. And then sometimes you have these big green candles, but I probably wouldn't draw that as a zone. I would probably do it like this, which it didn't come back to. I personally would have drawn that like that. And then over here like this. Demand zone comes back to it and gives you a beautiful hammer. So that's how I draw them. If the candle is already red where it's starting from, I use the whole candle down to the lows. If this candle is green, I'll start at the red candle before it and make it like this. Down. Oh shit! Sorry, that was a fib level. I start here and go like this. If this candle if this candle was green, I'd use that candle too. See, so now see how big this candle is? That kind of sucks. But also, guys, like I said, if you're using the direction, the EMAs can help you. You know? Obviously, I would mark this level off, but it went through it. I would mark this like that. It didn't make it back to it. Unfortunately, that would have been a nice trade if it spiked up to here. And then by the time it comes back to it, it went through it. Guys, sometimes you can see too, right? Watch. I usually use the fucking 15-minute shot. That's my favorite time frame to mark off supply and demand. It just gives you way more trades, way more fucking levels, way more everything, right? Candle before. Comes back to it. This one obviously didn't fucking, almost came back to it. Would have been nice if it came back to it and then dumped. Right? The gap is always a supply zone or a demand zone for me, because if it gapped from there, then it's a supply zone. Now, with a nice short right here, would have been a nice short right there. Didn't happen. Demand zone. Bottom of the candles. Show you the level, come back to it. Right here too. Big green demand candle. So I'll mark off the fucking one before it. Boom, boom, boom. Now, gap. Obviously, guys, there's a big red candle here, but the gap tells me the supply level. Because if it gapped down from there, then obviously it's a supply level. It gaps down, it comes back there, puts, boom, dump. Where does it dump to? Well, look where this huge move started from. The red candle before. Mark the red candle before to the lows. And show me the level and come back to it for the long. So, all right. That's all right. I recorded it, see, am I right? I mean, most of it I've already taught you. You guys, anyone who's been in here since the free room should know everything that I do. I can't thank you enough. Out of all the people I've learned from, you are the best. Never had anyone take as much time to answer all the questions. I am a very curious person, have a million fucking questions, but you really need, dude, any questions, hit me up, bro. Thank you. Did you talk about putting volume profile on? I did not see any charts with this. Yeah, I talked about it at the beginning. I don't put volume profile on because I already know, right? I already know this is volume profile right here. That's my trading experience tells me. Here's the high volume nodes. There's no volume here. I don't need them on my charts clogging up the colors and shit. You know, it's just, you guys can tell by where the price action is, where the high volume nodes are, right? That's just how it is. That's the biggest one. That's big, right? I don't need it. The longer it goes sideways in an area, the more high volume profile you're gonna have there. And I don't like the blue shit all over my charts, so I don't need it. But if you guys use it, it's good. It helps. See, high volume price. Look at this. Look at all this price. This is gonna have huge high volume price thing going all the way through here. Because look at all the price action that was done in here. that's just from experience. I don't need it on my chart to know, where the high volume is. So I just prefer to keep it off on some charts. I have it on some. If you'll see, look. Notice on my smaller charts I have it on. So it's like some charts are on, some charts are off. I just don't like it clogging up my fucking screens. It's recorded. Still recording too, luckily. Do you always take your entries on 10-minute charts? Or do you? No, I take my entries on 10-minute charts sometimes. Sometimes I take them on the daily chart, just looking at the daily chart. But you can get better entries if you use extensions on the 10-minute chart or patterns on the 10-minute charts combined with the daily chart. Sometimes you can get tighter risk-reward entries. Sometimes I just buy it when it wicks off. When I'm looking at the daily chart, the stock comes down, it wicks off a level, starts to bounce. I just buy it on the daily chart, put my stop below. Yeah, I like the hourly, 15-minute, whatever. They're both my favorite, 15-minute or hourly. Anything above that gets to be a little crazy. Any other questions, you guys? Going once. Also, you always talk about weekly EMAs and price to be either above or way below. Yeah, that was like, guys, that was like MTCH. Was it MTCH? No, it was, hold on, CVNA, was that one too? I forget which one it was. All right, check this out. So on this example, right, that awesome trade at $10 was right on top of the weekly EMAs and the daily EMAs. So that's an amazing opportunity. But let's say on the daily chart we had a good setup right here. And it's crossing on top of the 8. That's a good opportunity too, because you can push to the 21. That's all I'm basically saying. If you're extended off the 21 and 34 on the weekly chart, but you have a good daily chart setup, you might be able to push all the way back to the 21.34 on the weekly chart. So you just don't want to be taking longs right here. A daily chart setup right on top of the 8 and right below the 21 on the weekly. That's going to fucking cock block you. Damn it. I try not to talk vulgar this whole thing. Idiot. That's pretty much all I mean. Just knowing what position you are in, right? Maybe you want a long right here on the daily chart at support. You're way off the weekly EMAs. You can take that long. But you don't want a long right here on the daily chart when the weekly EMAs are right in front of your face about to punch you, slap you back down, right? And that's pretty much it. Just being aware where you are on the weekly chart compared to the daily chart. Are you trending with the weekly EMAs and the daily EMAs, or are you way under the weekly EMAs, pushing up to the daily and the weekly, way beneath both of them setting up? Or are you setting up right on top of both of them? You're welcome, brother. I hope it was good. I mean, sometimes I'm like, dude, can I even explain this shit? I don't know. It's like, seems like, I don't know. It's hard to explain, I guess. Very hard to explain if you're not just sitting here saying, oh, guys, you buy this breakout. Oh, you buy this breakout. That's how you trade. Buy this breakout. Yeah, all right, buddy. Thanks, brother. I mean, guys, I try to do something different. I feel like I've paid for shit before where a guy showed me triangles for an hour and a half, triangle breakouts. I said, Jesus Christ, did I just pay for this? And I've also paid for fucking things before where a guy showed me breakouts for an hour. And I'm like, what the fuck is going on here? Oh, sweet. Thanks, baby. Thanks, Holy. So it's just combining all this stuff together, Awesome. Thanks, Maverick. Thanks, you guys. I appreciate it. I know. They'll watch it. All right, I'm going to stop the recording so it's not fucking... It's already 2.5 hours. If you guys have any more questions or whatever...